Hello, everyone, and welcome to the latest in our series of INFUSE webinars hosted by Send. I'm Tony Tarquini. I'm going to be moderating our very interesting panel of speakers today. Our subject for this particular webinar is navigating the hard insurance market. And I'm very pleased to say that we've actually got, for a change in the insurance market, a panel of three ladies, one in the broking area, one in insights and consulting, and one who's been in the big job in underwriting and has now gone out on her own as an expert in the field. So I'm going to introduce the panel, but before I do, just want to give you a quick feel for what we're going to be talking about today. We're going to be looking at some of the market dynamics, what's happening out in the market, some of the drivers for change, and the things that underwriters can have to think about as they change with the adaptations in the market, some of the strategic preparedness that's going to be required, some best practices for underwriters to develop, and a playbook and enhanced operational capabilities, and also looking at the future outlook and predictions for the next 12 to 24 months. So before we get started, let me introduce our panel. First up, we have Tandis Neely, who is Managing Principal at Global Risk Management of Epic Insurance Brokers and Consultants. Welcome, Tandis.
Thank you, Tony. Nice to be here.
And second up, we have Martina Conlon, who's Executive Principal at Datos Insights. Hello, Martina. Good to see you.
Good morning.
And last but not least, we have Jen Keong, who's CEO and founder of Next Gen Underwriting. Now, unfortunately, I think Jen's video is not working today, so we're just going to hear her rather than see her. But welcome up anyway, Jen.
Thank you so much, Tony. Thanks for having me.
Right, well, maybe we can start just by having everybody introduce yourselves. Just a little bit of background about who you are, and frankly, why the audience should pay attention to you. Tandis, maybe if I can start with you.
Thank you, Tony. Hi, everyone. I'm Tandis Neely. I'm from Epic Insurance Brokers and Consultants. Been here for about 6 years. We are one of the top 10 insurance brokers, commercial and privately owned insurance brokers in the United States, with significant network of partnerships across the world. I've been in the insurance industry for the last over 20 years, let's just say. Been mostly on the liability side, both in terms of broking and also coverage counsel. And over the last 8 years, I've been running a team of global account executives who manage the relationships and risk management strategies for large international companies with a significant footprint in the U.S. So the hard market, soft market, every turn of the industry, I've been able to kind of observe personally and for my insureds, and so have been part of hopefully trying to develop some solutions along with our partnerships with the underwriting community to help the marketplace. And hopefully I'll be able to help everyone gain something from that experience today.
Excellent. Thank you, Tandis. Martina, over to you.
Good morning, everyone. I'm Martina Conlon, and I'm an Executive Principal with Datos Insights. Datos Insights is a research and advisory firm focused on insurance technology and operations. And we do consulting, research, industry analysis, trend analysis, and I currently work with over 100 insurers in helping them define their technology and operations strategies so that they can meet their business goals.
Fantastic. Thank you, Martina. And Jen.
Yeah, thank you. Hi, I'm Jen Keong. I'm the CEO and founder of Next Gen Underwriting. I've been in underwriting over 25 years. I've had a number of leadership roles on both the commercial lines and personal lines side, including Chief Underwriting Officer and Managing Director at an underwriting transformation practice. And what's been constant across all my roles is focusing on developing strategies for profitable growth and building new underwriting capabilities. So I'm very excited about the conversation today around the market.
Excellent. Well, thank you very much indeed, Jen. So let's get started. Let's start by just at a high level, start looking at the state of the market. I mean, the insurance cycle has increasingly moved from frankly being boringly predictable, you would know exactly where you were going to be in 5 years' time and 10 years' time, to much more volatile. So where are we in the current insurance cycle right now? Is it hard? Is it soft? Tandis, maybe if I could start with you.
Absolutely, Tony. Thank you. So I think the word you use volatile is very appropriate because there are some lines of business that you think that they're seemingly getting softer over the last year or so. And there are ones that have been on the rise and they don't seem to want to plateau at any point soon. So some of the factors that contribute to this volatile marketplace, and any one of these could probably, impact the balance of the market on its own, and then all of them together creates even more unpredictable marketplace for us. So the first item I'm going to start with the climate change. We all see the impact of the changing weather patterns. Today I complained to someone, it's November, it's freezing, and they said, what do you expect? It's November, even though last week in New York was summertime weather. So we are all seeing the impact. And so our underwriting modeling, which were created and done over 100 years ago, have not caught up with all the change in the weather pattern. So the crystal ball that they present to us is murkier than usual. And so that impacts the 100-year events are now occurring in a 10-year timelines and cadence. And so it creates a lot of unpredictability, not only in the property marketplace, but also in the capital marketplace for insurers and reinsurers who cover these events. The nuclear verdicts that we see in our liability marketplace space, our legal system abuse, lawsuits that would be settled for maybe hundreds of thousands, maybe tens of thousands over 10, 15 years ago are now going for millions of dollars, and it to a lot of jurors that seems to be monopoly money. So that's impacting the reaction of the underwriting community to covering this risk, and frankly, a big greater effort to push a lot of this risk to the insureds and the policyholders, as opposed to assuming the risk by cutting capacity, by cutting coverages. So that creates a lot more volatility in the marketplace. Inflation, in everything from property values, cost of labor, material, cost of auto parts, impacts everything, whether it's property insurance, auto insurance, liability insurance, all of that gets impacted. Cyber and frankly, AI issues. I know we're going to spend some time talking about generative AI and embracing it through our systems, but it has created issues in terms of, the bad actors becoming smarter and smarter in terms of infiltration into our systems and causing problems. And, frankly, it becomes easier and easier for them at times to do that. And then on top of that, all the regulatory issues, both in terms of AI regulation, cyber regulation, environmental regulation, that seemingly changing every day to protect consumers, of course, but then it creates more complicated scenarios for the insurance marketplace and the underwriting community to try to wrap their arms around.
So lots of issues affecting the underwriting cycle. Jen, up until fairly recently, you were in the hot seat in the C-suite of an insurer. Where with given all of that, where would you say we are in the market right now? Is it hard? Is it soft? Is it somewhere in between?
Yeah, I would say that it depends on the line. I completely agree with what Tandis was saying around the homeowners place for personal lines, right? Like we are not in a place of stability. We cannot predict what the pricing should be, given the volatility that we've seen for all the reasons that Tandis said. So I would expect that would continue to be hard as insurers are really trying to figure that out and navigate that. We're in a bit of a different place for auto, where insurers and personal lines have really been able to navigate that and regain profitability, regain stability in the auto area. So, and that's an area where now we're starting to see a lot of questions around affordability. And how do we maintain affordability for insureds in the marketplace? And so I think we're going to see now that the insureds become profitable, we might see a change there, and we might see prices starting to level in a different way. So I think it probably depends on the line, on how we would answer that question if we're in a hard market or a soft market.
Yeah, I agree with that. In terms of when working with our clients, certainly many insurers in the United States are primarily focused on lines of business that are hard right now, anything related to property, some things related to auto, those types of things, whether it's commercial or personal lines. But we do see an awful lot of insurers right now trying to expand into softer jurisdictions or softer lines of business like specialty, like E&S, where there appears to be a little bit more opportunity and things like that. So certainly I do think that there's activity across both the hard market and the soft market. And the insurers that we work with are doing different kinds of technology initiatives based on that line of business and the hardness and competitiveness of those lines.
Okay, so that's quite interesting. So we're seeing a lot of factors affecting the flow of the cycle, as Tandis has pointed out. We're seeing it line of business dependent, and we're seeing, as Jen said, and Martina, you making the point that insurers are moving across lines of business and looking at where they can have most effect. So how can underwriters and more broadly insurers plan for this sort of level of volatility and have some certainty around their business? Jen, what do you think of that?
Yeah, it's a great question. I think what the past several years have told us is we could not have predicted some of the things that happened, right? Like the level of inflation was unprecedented. The supply chain disruptions that we saw, the severe convective storm changes, the climate change that we've seen, we couldn't have predicted for the severity of some of these items. So what I'd say, I think what we learned and what is a good practice for underwriters is to be thoughtful around what are the different levers that we might have to pull in the future, not knowing what the next big risk is, right? As underwriters, we're used to dealing with risk. That's part of who we are. We've dealt with cycles over the years. But I think it's important to think about different scenarios that could happen and think about, hey, what would be the next geopolitical risk, supply chain risk, severe outage that we might experience in different parts of the country, right? So I think it's best to be prepared about those and then think about the different levers that you could pull as an underwriter. Think about how you would be agile. Think about the capabilities you need to have in place, because we can't possibly predict exactly what the next thing is, but we can have all of our levers, we can have our capabilities ready, we can have our toolkit ready, so that when that thing happens, we're poised and we're ready to go. We're ready to move in, and then we're able to move more quickly when those types of things happen.
So hope for the best and plan for the worst, I guess, is something what we're sort of saying there. So then that obviously leads me on to the question: what are the underwriting challenges and the business drivers that underwriters are now facing? Martina, what are you seeing amongst your clients?
So I think it used to be for underwriters that one of the biggest challenges was getting data, getting accurate data that you could effectively underwrite and price a policy. Now that we have so many different sources of data, third-party data, the agents, the policyholder, and the whole InsurTech world that is able to marry social data with third-party data and internal data, the challenge has shifted a little bit to how to assimilate and analyze the vast amount of data that you may have about an industry or a particular risk. And I think that now technologies are coming to play, like predictive models and AI that really can help the human analyze and comprehend that data. But I think, so data has been a challenge. The data challenge is a little bit different now. But the other challenge I think that underwriters have today really are, in order to address a hard market or a soft market that you have to be very competitive in, everyone is trying to drive efficiency in underwriting operations, efficiency in claims processing, but underwriting efficiency is a top priority for most of the clients and those who are research council that participate in our surveys that we conduct every year. And so they're trying to drive efficiency so that they can grow revenue without growing people, growing the size of their staff. And a lot of that has to do with increasing the level of automation that you have, being able to introduce new lines of business, as we mentioned before, in terms of a very quickly rapid time to market is a big challenge. But driving efficiency with leveraging, automation and leveraging products like Send and other commercial lines workbenches or personal lines workbenches, AI-enabled text ingestion instead of redundant data entry multiple times into different systems, things like that. A lot of the things that many organizations, struggle with and have their underwriter assistants doing. And really, sort of thinking about the opportunity to become more efficient and more accurate by using more than a spreadsheet, using more than a policy system, really being able to find tools and automation that will drive that efficiency is, again, top priority for a lot of our clients.
Okay, and Tandis, you're seeing it from the other side, from a broking side. Are you seeing that as something that you would like to see more from underwriters?
Absolutely. I think from a broker working with underwriter community, we've seen a trend of automation in the underwriting community. We've seen authority kind of shifted higher up because a lot of it has been automated. But I think it's a great opportunity, and we see that across the board, that allows the underwriting community, underwriters and insurance companies to kind of think outside of the box. For a lot of these transactional tasks being automated, it allows them to not to embrace AI alone, but also kind of think outside the box, be more creative about the solutions they come up with. And so it becomes less of a conversation of this is covered, this is not covered, because my system tells me how can we work together to solve this problem for our mutual client and the marketplace. So that's been very helpful. And then also from a brokerage side, we're engaging AI in a very similar capacity as to what Martina was mentioning in terms of automating losses and claims and understanding the company's loss experience from a very holistic point of view. Policy review automations, a lot of client research and information on clients, HR help, a lot of things. And interesting, I talked about thinking outside of the box and creativity. One of the solutions we have come up with over the last couple of years is we are partnering with a company called PradyCat, which specializes in doing scientific research on various chemical companies and chemical products. So, PFAS we all hear about. It's an issue globally in terms of an environmental impact and health impact. And so they're trying to predict the next PFAS, predict the next asbestos. So we have a client who's a chemical manufacturer and benefits from the fact that we are giving them a crystal ball of all these different chemicals that they're involved in. Which one do they need to budget for more? What limits do they need to acquire? How can they be more prepared in terms of future planning, as opposed to just how the insurance industry, frankly, has acted in the past, which has been very reactive. This AI really allows us to be more proactive about what we want to accomplish and what we want the future to look like, and how can we get there more efficiently.
So Tandis, that leads me to ask the question. We've looked at some of the downsides and the challenges and what we've got to do around underwriting. What are the opportunities that are now presenting themselves in the market, given where we are? You sort of touched on one there, but I'm interested if there are any others.
So like I said earlier, I think it does create an opportunity for a lot more creative thinking. Again, like the insurance industry has been reactive, and this is a chance for us to come to the 21st century, right? We are a capital marketplace. We are not, no knock on Geico, that the Geico commercials, everybody thinks of, okay, your car insurance, your auto insurance. We are a source of capital for the companies to be able to do their work and be successful and grow. So in engaging with generative AI to kind of in a very proactive and thoughtful way, it really allows us to kind of help ourselves and help other companies be successful. But we do need to kind of be mindful of, how we use it, trust, but verify. But we need to invest in training and educating our people, whether it's in the underwriting community or the users of the underwriting the insurance industry, to how to best benefit from AI, and without really exposing ourselves to more volatility in the marketplace, like I said earlier, with the cyber issues and the regulatory issues. So it is a chance to kind of step above the norm and just kind of look in the future and understand where we want to go and drive towards it.
Okay, so Jen, do you see opportunities presenting themselves in the market?
Yeah, I do, and I wanted to build on something Tanda said, and also one other point. So picking up on the AI front, I do think that there is quite a bit of opportunity to responsibly use AI to support our underwriters. I think what we've already seen is the ability to use AI ML in looking at the multitudes of data and helping underwriters determine when to go out and get data, to help them go through and analyze large amounts of data by leveraging models to do that. We've seen that be very successful in the marketplace, given the data challenges that we've mentioned. And I think there's quite a bit more there, especially with the unstructured data that's brought in, that we haven't even hit the tip of the iceberg there, right, on what we're able to do with AI in mining through all of that data to bring insights to underwriting. So I think that's one piece. I think the other is, on the property front that we've all touched on here with property insurance and the issues we're having with volatility. I think this is a real moment of opportunity in the insurance industry for underwriters to creatively look at how we structure products going forward. And what I mean by that is we're all in a place of crisis where we don't know how we're going to profitably write property going forward, right? I think this is a moment where we say, maybe we need to take a look at our products and think about shared responsibility with consumers, with insureds in a very new way. And maybe that property product needs to look very different in the future in insurance, in certain geographies. I think this is a real moment for us. I think this is a real moment for underwriters to get creative with thinking about how they think about risk mitigation, how they think about structuring products very creatively, how they take a look at those data insights to learn more about those risks and structure the products and mitigation techniques in a very holistic way. So I think about this as, this is a real moment for us. This is exciting, actually. It should be exciting for underwriters to think about how we can do this going forward.
So I think that whole AI thing gives potentially a virtuous circle of getting more data, interpreting it, allowing underwriters to create better products, which again, feed back out into the market. So you end up hopefully in a virtuous circle. I
do think that there is other opportunity with technology. AI is already benefiting us, and there's great promise in AI and being able to assist us across the board. But I do think one of the opportunities we have is to make these kind of creative and potentially drastic changes about our products and the way we engage with our customers, leveraging technology partners in general. I think that technology partners, those who offer configurable core systems, underwriting workbenches, digital capabilities that are so necessary for us to engage with our customers. I think the fact that we have a really good community of vendors and service providers in our space really does help us accelerate time to market as well as time to value. So there's a big opportunity there to be successful first time out.
Just on that then, Martin, I'd just like to pose a question to you. I've been in this market a long time, and I know most of the vendors who are out there. But I've got to say that over the last 3 to 5 years, there's been an absolute meteor shower of AI companies targeting the insurance industry. I would suggest that it's important that you select your partners very carefully as you're going through this journey, because you don't want to swap your AI vendors and suppliers every 5 minutes. It's got to be a long-term journey to deploy that. Are you seeing anything around the sort of philosophy with underwriters on how they're adopting live deployment, choosing partners, that sort of thing?
So I think when they're deciding what kind of capabilities they want to take advantage of, there is an openness as long as there's a human in the loop, especially when we're dealing with large language models. but there is certainly an openness in the underwriting community for leveraging AI. You know, we've seen great adoption of aerial photography, imagery, estimatics, different things like that. You know, those are voice AI is well adopted in the insurance industry. So we've done a good job in that kind of adoption. Where we're seeing a little more hesitance is in the large language models, because they are potentially so much more powerful, but also there is a level of risk, obviously, that we're all aware of. So we are seeing the philosophy of keep the human in the loop with large language models in particular, and roll them out in the lower risk areas first until we build confidence. That does require that you do a proof of concept. It does require that you keep it to areas for like text ingestion, submission processing, lifting data off of submission documents, pushing them into your underwriting workbench or your policy system or your portal, doing completeness checks, doing some light risk analysis, but really not putting it in the high risk areas like making underwriting decisions or making product recommendations. We do see that organizations really are being cautious about keeping it away from areas that regulatory issues will come up or where there's more high risk. But you know, generally there is an openness to it, more so than what I saw in some years ago with predictive models and trusting predictive models in some ways. Again, it is because we are hedging it to an area where it is lower risk. But I will say about the choosing partners, the market is changing so quickly. AI is an area where you're going to change partners a lot, because right now one large language model may be great at risk analysis, but next year another one may be completely different. So most technical organizations are looking to do kind of a plug and play architecture for AI components that you can swap out over time.
Okay, I think it's a very good piece of advice, Martina. Okay, well, look, we only got about 3 minutes left, so I would like to leave our audience with some last-minute thoughts. So to finish, I'd like to ask each of you, what's the one thing you would advise our audience to remember from this session that they can utilize in their daily work? Tandis, if I could start with you, very briefly, what would you want everybody to remember?
Absolutely. So listen, AI is here to stay. You know, that's exciting and scary as it may be. I think each of us as individuals, as members of our organizations, need to think about how can we engage AI in a very smart way to enhance what we have to do. Don't fight it. Let's embrace it, but be smart about it. Let's understand. Let's engage it in a very productive way to make our work more efficient, but verify, and also kind of stay abreast of, like I said, regulations, issues surrounding it, so we can be proactive and thoughtful about it, as opposed to reactive and not potentially not as successful.
Excellent, thank you. Martina, your thoughts?
Don't go it alone. There are great technology and service partners to help you achieve your business goals and technology goals. And really, we are lucky in the insurance industry, in the P&C insurance industry specifically, that we have those kind of partnerships that can help us meet our goals.
I think it's a very good piece of advice as well. Jen, the last word with you.
Yeah, thank you. I would advise as underwriters to get your toolkit ready. If you haven't done this already, put your toolkit together, be clear what your levers are, what your capabilities are, and be clear about what you have ready to go for your different scenarios. So it's kind of risk management 101, but dedicate some time to thinking about your scenarios, your levers, and your capabilities so that you're at the ready when the next thing happens.
That's brilliant. I think 3 really good pieces of advice there for people to take away. So really, I think it just remains for me to say thank you to our panel. We've got a lot of ground, a lot of very good content in there. Thank you to our audience for coming to join us today. There will be our next webinar on Wednesday, the 11th of December, which is going to be on a pretty important subject for underwriting, future-proofing the investment in underwriting, touching on some of the subjects we've just talked about today. We'll be looking at that in much more detail. So I look forward to seeing you on the 11th of December. And just remains to say thank you very much to everybody for coming along and enjoying this subject. See you next time.
Thank you.